Now, welcome to our today's class. We now want to talk about the unit is what we call the financial reporting and analysis. We will proceed from where we left in our previous class. I say that today we'll talk about the accounting for agriculture. That is under IAS 41. Accounting for agriculture. Generally, the farming activities, what we call the agriculture. See how the farming or agricultural entities are required to prepare their financial statement. So unit is FRA, accounting for agriculture. FRA, accounting for agriculture. So accounting for agriculture. Accounting for agriculture is what we'll now be talking about. The accounting for agriculture. As I've said, that is under IAS 41. Accounting for agriculture. The IAS 41. IAS 41. Now, for IAS 41, it provides for accounting for farming activities. And when we talk about farming activities, we are talking about animals and crop growing. Which in our case, we also talk of them as biological assets. And I talk of animal and crop farming of the crops is what we call a biological asset. So we'll be able to know the circumstances under which an entity should recognize biological assets on the financial statements. And then we'll also be able to know what are the features of an agricultural activity. And then from there, we'll also be able to know the accounting treatments of the biological assets. So you can begin by saying, IAS 41 provides for accounting for farming activities. IAS 41 provides for accounting for farming activities. Provides for accounting for farming activities. Accounting for farming activities, which is animal and crop growing for profit generation, which is animal and crop growing for profit generation, and crop growing for profit generation. Crop growing for profit generation. See, the animal and the crop, are known as biological assets. You write and say, biological assets are living animals and plants. Biological assets are living animals and plants. Living animals and plants. Living animals and plants as a result of agricultural activities. As a result of agricultural activities. As a result of agricultural activities. See, agricultural activity is a management. Agricultural activity is a management. Agricultural activity is a management. Agricultural activity is management of entities' biological transformation. Of entities' biological transformation. When it is biological transformation. Features of agricultural activities. You can talk of that. The features of agricultural activities. Features of agricultural activities. See, number one is capabilities of change. The capabilities of change. Capabilities of change. Capabilities of change. Say, biological assets are capable of biological transformation. Biological assets are capable of biological transformation. Are capable of biological transformation. Are capable of biological transformation. Number two is the management of change. Management of change. See, management facilitates biological transformation. Management facilitates biological transformation. Biological transformation. The last one is the measurement of change. Number three, measurement of change. So those are the features of agricultural activities. Now we can talk of the circumstances under which an entity should recognize a biological asset. Circumstances in which or under which circumstances under which an entity should recognize, and in which an entity should recognize, a biological asset. In other cases is what we call the disclosure requirement. The disclosure requirement. And not only for the biological asset, this is for all the assets, whether it's a PPE, whether it's an investment property. These are the circumstances under which we can recognize them in the financial statement. Number one, if the entity controls the asset, as a result of past events. If the entity controls the asset as a result of past event. Number two, it is probable that, it is probable that future economic benefits, associated with the asset, will flow to the entity. Number three, the asset value can be measured reliably. The asset value can be measured reliably. So those are the circumstances under which an entity must or should recognize a biological asset. And as I've said, it's not only the biological asset, but for all the assets. To recognize those assets, it must meet 2-3 conditions that we've been able to talk about. Now, accounting treatment for biological assets. Accounting treatment. Now, I want you to note, when we talk of the disclosure requirements or the circumstances we are recognizing, accounting treatment, we are talking of how do we treat them when preparing now the financial statements. The accounting treatment for a biological asset is a question that was there November 2019, question 5A. November 2019. If you look at November 2019 of our FRA, there is a financial reporting paper. If you look at November 2019, question 5A. You look at the paper of November 2019, 5A. November 2019, question 5A. November 2019, question 5A. This is what the questionnaire states. It says that with reference to International Accounting Standards 41, agriculture, discuss the accounting treatment of a biological asset, and they told you not to discuss the disclosure requirement. Disclosure requirement is what I've been able to talk about. The circumstances which an entity must or should recognize a biological asset. Now we want to know, how do we treat them? Here we are talking about how do we treat the agricultural produce? How do we treat any gain on recognition of that given biological asset in the ETC? Any gain also on the agricultural produce? How do we treat them? So number one, can write and say. Number one, can write and say. Number one, you can write and say. The agricultural produce is measured. Agricultural produce is measured at their value less estimated cost to sell. At their value less estimated cost to sell, measured at their value less the estimated cost to sell. Their value less the estimated cost to sell at the point of harvest. At the point of harvest. Yani tunamaanisha hivi, you have to recognize it at the price that you will be able to sell the produce, less the cost that you incur in selling it. If you are advertising for the product, if you are making anything relating to the sale, you have to less it. That is how we are required to value or to measure it. Number two, say, the gain on initial recognition of a biological asset. Gain of initial recognition of biological asset. Initial recognition of biological asset at their value less cost to sell. At their value less cost to sell. Their value less cost to sell, and changes in their value. And changes in their value less cost to sell, and changes in their value less cost to sell should be included in the profit or loss account. Should be included in the profit or loss account. Should be included in the profit or loss account. Now, this is it. From the circumstances, we've said that the assets must or should be measured reliably. When you are measuring the value, the asset, the biological asset here is whereby you are looking at the current value of it. It is worthy how much? Are we together? So if you may value and realize that there is any gain or any loss, we have to include it in the what? P&L. I mean the income statement. Number three. Again, on initial recognition of agricultural produce. Again, on initial recognition of agricultural produce. On initial recognition of agricultural produce. Agricultural produce. At their value less cost to sell. At their value less cost to sell. And their value less cost to sell should be included in profit or loss for the period. In the profit or loss account for the period. Should be included in the profit or loss account for the period. Should be included in the profit or loss account for the period. And the last one, you say, all costs related to a biological asset, all costs related to a biological asset, that are measured at their value, are recognized as an expense, are recognized as an expense, recognized as an expense, when incurred other than cost to produce a biological asset. When incurred other than cost to produce biological asset. Other than cost to produce biological assets. So if a biological asset is measured at their value, any cost that is relating to that particular biological asset, we should recognize it as an expense, not the cost to produce the biological asset. And those are the accounting treatment for a biological or a biological asset. We can talk over the special transaction for accounting for agricultural activities. Special transaction of accounting for agricultural activities. Special transaction of accounting for agricultural activities. Of accounting for agricultural activities. Agricultural activities. Now let's begin with the farm produce consumed by farm owners. Consumed by farm owners. And I want you to be keen on this, because mainly this is how what will help us in preparing the accounts. Also, because here we are required to prepare the revenue accounts. And revenue accounts here will also require us to have the knowledge on what? These accounting treatments. Now, wenyewe wamechukua goods wakakula. When you take goods first, that is a drawing. Sawa. And we know drawings have to reduce your capital. But now here, if they take the goods, we assume is like we have sold to them. Sawa. So what we do, it is increasing the drawings, which in this case, the drawings reduces their capital, and then we will credit the sales. We have sold them to them. So you have to debit the drawings account, and then you credit the what? The sales account. Are we together? That is when now the owners have consumed a particular good. Then the other one is number 2, labor services provided by farm owners. Provided by farm owners. Wenyewe sasa. Now, if the owners have provided any labor service, we have to pay them. Means that here we will be paying them at expense in form of what? Wages or so, which in this case is going to reduce now the amount that they wamekula for free. Si wame provide service, it will recover this amount. Therefore, we credit what? Drawings. We will credit the drawings. We'll credit the drawings. That is on labor services provided by the farm owners. Number 3 is the labor or workers. Laborers or workers paid in kind. Laborers, workers paid in kind. the benefits in kind. Now, if you pay for them in kind first, it will also increase the expense. We do what we call a contra entry. Here, we'll debit the expense because they have provided the number. Then you credit the sales. Mainly what I mean is should be a contra what? Contra entry. Contra entry. They've provided it or in kind. That is the entry. Then the last one is the interdepartmental transaction. In the departmental transactions. Interdepartmental transactions. When we talk of the interdepartmental transaction, this is where, let's say, we have what we call the livestock department, and we have the crop what? Department. So the crops may be consumed by livestock. Ama livestock ipee crops manure. Hiyo ndo tunaita nini? The interdepartmental transaction. So if one is giving the other, ni kumaanisha anamuuzia, huyo mwingine ana purchase. So meaning that here you will be debiting what we call the purchases account, then you credit what? The sales account. Sales account. You'll be doing that. You debit the purchases. Mmoja kuna mwenye ananunua, huyu mwingine anafanya nini? Anamuuzia. And those are the specialized transactions of accounting for agricultural activities. You can note this down there. Now, right, and you say, for economic evaluation purposes, each agricultural department prepares farm revenue account, to determine the profit for the period. Farm revenue account to determine the profit for the period. Say there are 3 agricultural departments. There are 3 agricultural departments. Number one, the livestock department. Number two is the crop department. And number three, you can talk of poultry department. Poultry department. Now, let's see how we prepare the farm revenue account. Now, for the farm revenue account, we will have the opening stock. Yeah. We'll also have the closing stock. You credit that. If there is any purchase, we'll debit. Purchases, any sales, we credit the sales. There is also what we call the expenses. Will there be the expenses? Any income we credit the incomes. And with that, you balance. If you balance, the balancing figure is on this side. This will be profit. That is the profit. If it's on this side, then this will be a what? Loss. That will be a loss. That will be a loss. Now, we can now do the question in May. Let's do the question in May 2014, 2012, question 4. There is a past paper that I've shared, written now with 34 pages. Is the paper that we're going to use. The paper that I've shared, written now in the group, that is the CPA, intermediate level group. You can check from there. Check, confirm whether you have the paper. Check from the group. Now, I'm hoping you have in the paper. It is written from May 2015, as I've said. When we do May 2012, question number 4 is the one that I want we do. May 2012. May 2012. Question number 4. May 2012 should be question number 4. May 2012. Question number 4. The one that I want we do. The May 2012 question number 4. Moving, everyone is there, so we just do the question. May 2012 question number 4. May 2012 question number 4. So this is what the question reads on Roman number 1. You are to explain circumstances under which an entity should recognize a biological asset on agricultural context of IAS 41, agriculture. That one we've talked about. So I want to do question number B. Following balances were extracted from the books of Shamba Limited as of 31st March 2012. Given the mortgage for Rural Development Bank, retained profits, ordinary shares, farm workers' wages, manager's salary, cash in hand, receivables. You also have the farm tools, repairs to machinery, staff welfare, farmhouse expenses, the purchases of the seeds, livestock. We have the fertilizer, livestock feeds, and we also have the livestock. Wages we have been given for the livestock, expenses for crops and livestock. Administration expenses, interest on what we call the mortgages. Inventories as of 1st of April 2011 for crop growing or seeds and fertilizer, livestock, and also for livestock feeds. General insurance premium, payables, bank balance, sale we've been given for crops, the cattle, and the carcasses. Farm machinery, land and buildings. Additional information. On additional information number 1, you've been given that inventories as at 31st March 2012 are valued as follows. Given for growing crops were valued as follows. We've been given growing crop seeds and fertilizers, livestock feeds. Manager salary is charged to livestock and crop revenue account in the ratio of 1:3, respectively. Valuation of farm tools as at 31st March 2012 was 1.2. Depreciation of farm machinery is to be provided on 20% on book value. Depreciation and repairs of farm machinery are to be charged on the general income statement. Insurance premium prepaid amounted to 240 and is also to be charged to the general income statement. Manure worthy 180,000 was used in the farm, while farm crops used to feed the livestock were valued on 390 shillings. Budgets of 300,000 are to be written off, and an allowance for doubtful debts of 40% is to be provided. Crops consumed by farm laborers were valued at shillings 100,000. This amount was recovered from their wages. The shareholders provided farm labor valued at 1.2 million, while crops valued at 1920 were donated to charity during the year. income taxes of 1.8 is to be provided, you are required the crop and livestock revenue account in columnar format for the year ended 31st March 2012. General income statement and also the statement of financial position. So this is Shamba Limited. The Shamba Limited. So the first thing that we'll draw is the crop and livestock. Livestock revenue account. Revenue account. So in columnar format, meaning that I need to have the debit side. And I'll also need to have the credit side. Debit side here we'll have for the crop. I will also have for the livestock. That is on the debit side. This other side will also have four. We have for the crop, the credit side, and I will also have for the livestock. Livestock. So shillings are in thousands. So I will use them in thousands. Thousands. Also in thousands. So we begin. First thing that we said, we begin with the opening stock. Opening stock or inventories. Now, what was the opening stock for crops? We were given on the balances, the trial balances there. For growing crops is 12,000. That is under crops. Given also for livestock, 15,000. The other one is livestock feeds, 36. Right? We also have the closing stock we credit. Closing stock. That is on additional information number 1. This is 6,000. The other one is 24,000. That is for the livestock. And livestock feeds of 600. That is for the opening and closing stock. We'll also have for the purchases. Purchases from the balances we've been given. For seeds, it was 2,400. For the other one is the livestock. Livestock was 6,000. Another one is the fertilizer. We use fertilizer for farming, 1,500. Livestock feeds, that is on livestock 420. Right? We also do the same for the sales. Sales, there was sale of crops, 21,000. There was also a sale of cattle, 36,000. And then there was carcasses, that is for the livestock, which was 9,000. Now we'll look for the expenses that relate to either of the crop or the livestock. So from up there, we have the manager's salary. Manager's salary. Now, when you look at the manager's salary, on number 2, it was apportioned to the livestock and crop respectively. And 1 is to the what? 3. So that means I would take, for this one, you will take 3/4 for the crop, then 1/4 of what amount? The manager's salary, that is 600. So if you take 3/4 of that is 600, it will give you how much? to give us how much? The 2,700. So that is for livestock will be 900. Is that okay? Sawa sawa. We continue. Number 2. Yes. So livestock goes 1 over the total. Livestock is 1 over 4, sindio? And for the crop is 3 over what? Of the total from the trial balance. You can see manager's salary. Yes. That is what we are using. We continue. From the trial balance again, I can also see we have the wages for livestock. So this is wages only. Wages were for livestock only, which was of how much? From the balances, I see is 996. We also have other expenses there. Expenses there, we've been given that 6,000 were for crops, 7380 for livestock. 7380 given there for livestock. Is that okay? So we can now proceed. So additional information number 3. Want to see anything, whether there is anything that is affecting them. Valuation of farm tools as at 31st March 2012 were 1,200. That will help us in determining the depreciation of farm tools. And depreciation, we are taking them to general income statement. The one was insurance prepaid. That is a prepayment. It will affect us in the preparations of general income statement. Number 5. Manure worth shillings 18,000 were used in the farm, while farm crops used to feed the livestock were valued at 390. So this is what we said is an interdepartmental transaction. Interdepartmental transaction, we said we will add the sale and we'll debit the purchases. So kuna mwenye ananunulia mwingine. Like for example, the manure worth 180 was used by the farm, meaning that the manure is from the livestock. The livestock is selling into what? Crop department. So livestock ndo anauza of 180. So meaning that the crop is the one purchasing 180. Are we together? Then also the farm crops used to feed livestock. Crop is now selling to the livestock. So it was of 390. So here we'll also have the livestock purchasing from the crop. That is the interdepartmental transaction. The interdepartmental transaction. We continue. Bad debts of 300,000 are to be written off, and an allowance or doubtful debts of 4% to be provided. That will affect the general income statement. The one, crops consumed by farm workers were valued at 600,000. So these are what? Is what we talked about as a farm produce consumed by the what? Owners. What did we say we do? We debit the what? Drawings account. Then you credit the what? The sales. Sawa. Meaning that here I will only credit on the sales Then drawings, we know it affects the capital. So if you say debit in the capital, the drawings, you will be reducing the capital account. Are we together? So this is the crops. The crops. We've said that they are the crops consumed, and this is what I said is our is of yeah, contra entry. Let me just call it the contra, which is of sales. I will have it was for crops 600, right? That was how. And therefore, in this case, it will also we'll also take it to the drawings so that, oh yeah, now there is a statement that wameongeza hapo. Sasa hiyo ndo itatuambia hapa kama they recovered age from what farm. Oh, this was farm workers, not farm owners. So hapa tunafaa kuwa hiyo contra entry sawa sawa. The laborers provide the services provided by the goods consumed by the farm owner. So that means we'll assume it you have sold to them, sawa sawa, and you recover that amount from their what? Wages. Meaning that here the contra, I will debit it as an expense, which is a wage of 600. Because these are farm workers have consumed it. You have recovered them from their what? Their wages. We continue. Another one is the shareholders provided farm labor 1.2. Hiyo ni farm labor, tuambiwe kama ni ya wapi. We are not being told whether it is for what? Livestock or what. Sasa hii ndo tunaenda kuipeleka kwa drawings. Lakini sasa itakuwa inaongeza capital juu wao ndo wameprovide the labor services. We continue. While crops valued at 1920 were donated, these are benefits in kind. So for donation, we said we assume they have made a sale. So the donation ni kama umeuza of how much? 1920. And as an expense, donation was an expense 1920. 1920. Income tax expense given is 18, it is not having any impact. So we can now balance them. Yeah, the balancing, where is the balancing figure? So credit side seems to be more. So get the total on the credit side. You balance. Know which profit they were able to make. The profit that they made is of how much? Get the total on the credit side. For crop is how much? 20. The total or the balance? 29,910. 29,910. This is 26,10. Now the total for the livestock. Total for the livestock. 69,780. 69,780. So 69,780. Balance. You tell me how much is it giving you? Tell me it's giving you how much? How much is he giving you? 26 490. And that is Roman number 1, the crop and livestock revenue account in columnar format. Go to the second one, general income statement. This is Shamba Limited. The general income statement for the year ended. This should be 31st March 2012. So shillings are in thousands. Shillings are in thousands. So we begin from the revenue. So revenue from both the crop and the livestock. Now revenue from the crop is of how much? We've gotten 2610 from the crop. And this other one we've gotten 26,490. If you get the total, what is the total revenue? Or is the total revenue? 29,100. So we less expenses. And I will first begin with the expenses in additional information. And now those expenses that we've not been able to do, consider them. So we begin with the number 3. There was valuation of farm tools. Now, when you look at the farm tools from the trial balance, it was 1,500, right? So they have reduced their value to how much? 1,200. That is depreciation. So I will have depreciation first. Farm tools. For farm tools, it was 1,500, but now it is at 1,200. They have reduced it by how much? 300. They have lost value by 300. And that is the depreciation. Another one was for the machinery. Machinery, 20% of the book value. Book value is what is on our balances there, which in our case, what is in our balances is 46 what? The second last line, 46,800. Which in that case, it will give you how much? How much is it giving you? 9360. We continue. We also have the repairs on farm machinery. Repairs on farm machinery. Of how much? Repairs on farm machinery, we were told on the trial balance, it is 300. Continue. Insurance prepaid. So here we have the insurance premium. If an expense is paid, we exclude it. Why? We apply what we call the matching concept of accounting, which requires us to match the revenue with the expenses incurred on the same accounting period. When you prepare for an expense, you have not yet incurred the what? The expense. And therefore, we have to eliminate it since it's not for this current period. So it will be 2880 from the trial balance, the general insurance premium, I minus what was prepaid of 240. How much is it giving you? 20, 2640. We continue. Number 5 we consider. Number 6 is the bad debts. Bad debts were of how much? 300. Bad debts were 300. Then number 7, number 6 again. There was also allowance for doubtful debts. The allowance for doubtful debt was of how much? For doubtful what? Doubtful debts. Allowance for doubtful debts is for the account, you make it for the account receivables. Are we together? That you've not yet written off. And therefore, this will be, the allowance was of 4%. I go to the receivables. What was the receivables on trial balance? The receivables were of 18 what? Out of this receivable already you have written off. You cannot make a provision on a bad debt already written off. Because doubtful is what you are what? You are in doubt you're going to receive. Sawa sawa. So how much is it giving you? 7? You have multiplied by, I'm saying first you have to eliminate the bad what? Yeah, bad debt that you have written off. To be how much? 708. We continue. We have the donations. That one we're not going to include again. We have the shareholders provided what? Labor provided by, remember we said if they provide labor services, we treat it as an expense. They have to be paid the wages. Labor provided by shareholders. By shareholders. They provided of how much? This was 1200. We continue. Donations, we're not going income tax. That is after before we get the profit before tax. So we go to the trial balance. Any other expense that we've not considered? I see from up there, farm workers' wages. Workers' wages. Farm workers' wages of how much? 3,000. One is the staff welfare. Staff welfare. Staff welfare was of how much? 600. The one is farmhouse expenses. Farmhouse expenses. Farmhouse expenses we have is of how much? 7 what? 20. We also have administrative expenses. Administrative expenses. Administrative expenses of how much? 2,400. You also have the interest on mortgage. Interest on mortgage of how much? Interest on mortgage is 2,700. No other expense that we've not considered. So you can get the total of the expenses. How much is it giving you as the total of the expenses? So that we can know the profit before tax. So that we can know what is the profit before tax. Total expenses. How much are you getting as our total expenses? Mhm. 20, 24 to 28. If you less, what is the profit before tax? Yeah, 48.72. Less the income tax expense. Income tax expense, which is of how much? On additional information about what? Yeah, the last additional information, it was of 1800. So what is our profit after tax? Profit after tax. The profit after tax. When you acquire mortgages, interest on mortgages is not an income. You pay for mortgage interest. So a mortgage is just a loan. It's just like a loan again. So you have to pay for that. There is something, someone is saying that allowance for doubtful debts. 1800 you multiply by 3, 18,000 minus 300, that is 17 what? 17, 18, 17, 700. If you multiply by 4%, then you can confirm. I think yours is wrong. Confirm again. The allowance for doubtful debt should not be, it should be the 7 or 8. Confirm again. Should be 708. Now this is giving you how much? 30, 72. And that is the income statement. Now we can go to the last one. Shamba Limited. We want to now do the statement of financial statement of financial position. And this is as at what? This was as 31st March 2012. So we have shillings in what? Thousands. Begin with assets. Assets, we categorize them in both the non-current assets and current what? Non-current assets and current assets. So we begin with the non-current assets. From the trial balance, I see we have the land and building, the last one, the land and building. The last one on the balance is land and building is of how much? 100 and what? 20,000. We also have the farm machinery. Farm machinery. Farm machinery was 46,800, but we have to eliminate the depreciation because we have to put them at net book value. As we value them, we have to value them on what we call the cost model, which means is at net book what? Value. So you have to take the cost minus the accumulated depreciation. How much is it giving you? I've said is the second last one on the trial balance. Then you less what we had computed here for the depreciation. 9360. How much is it giving you? Nakupea ngapi? Gideon, umepata ngapi? 37. We also have farm tools. Farm tools were written down to how much? As at 30th December, at 31st March 2012 was 1200. That is on what we call the non-current assets. We go to current assets. Now, on current assets here, we have the inventories, and this is the closing inventories, which was on additional information number 1, 6,000. You add, this should be 24,000. You add 600. How much is it giving you? How much? 30, 600. We also have the receivables. Receivables, they were initially 18,000. Sawa. They made a bad debt, or there is a bad debt that was written off, 300. And then also a provision of how much? 708. When you make a provision will reduce our receivable, which in this case we made a provision of 708. So what is the balance? What is the balance? 16,992. We also add cash in hand. Cash in hand was of how much? The balances was 15 what? Now, the bank balance there, we were told that it was a credit balance. If the credit balance, that means it's an overdraft. So, and therefore, we're not going to put it here. And then there was a prepaid. Prepayment, we take them as part of current work, because you have not incurred as an expense, so meaning that you can claim that money. So prepaid insurance on additional information number 4 was 240. Here the total assets. Mm-hmm. 222, 072. That way. Equity and liabilities. Equity and liabilities. For equity and liabilities, we have what we call the equity and liabilities. We have the ordinary share capital. Ordinary share capital. Now, what was the ordinary share capital? What was the ordinary share capital? And you look from the second line there, it was of how much? 260, 163, 200. We also have the retained profits. Now, retained profits increases our capital. Retained earnings were 100 and there were 6,000 on the trial balance. The profit was 3072. So now the shareholders provided labor services. We said wanalipwa. When you pay them, it will increase their what? Their capital, which in this case it means that they are increasing their profit. So in that case, they provided services worth 12,000. So get 1,200. Get the total. Get the total. What is the total? Yes? 10, 272. 72. Go to non-current liabilities. On non-current liabilities, we have the what? The mortgage from Rural Development Bank. Mortgage from Rural Development Bank. The Rural Development Bank was of how much? Mortgage from Rural Development Bank was 36,000. We don't have another loan. Can go to current liabilities. What is our current liabilities? What is the mortgage from Rural Development Bank? We've gotten is 36. Current liabilities here we have the what? Payables. What was the amount for the payables here? The payables are of how much? Is it 9,000? The bank overdraft. The bank balance now, that is an overdraft. Of how much? Bank overdraft is of how much there? 1,800. Then the income tax expense, since it was not on the trial balance, it means that they had not paid for that expense, which was of how much? 1,800. So get the total equity and liabilities. Total equity and liabilities. Total equity and liabilities, how much is it given you? What is the total equity and liabilities? So it is balancing 222,072. And that is how you are required to do that. That okay? There's only one question that has ever been tested here in November 2020 5A. That is what you do as an assignment. November 2020 question 5A. Do that as an assignment. And then we will proceed from there as from our next class. Next class, we'll now do accounting for provisional farms. So let's continue from there.